We should start with, when are you a tax resident of Spain? It's an easy question, but the answer is not easy at all. And there are a lot of cases where tax residency is then under dispute. The law is clear and says that you are a tax resident of Spain if you spend in a calendar year more than 183 days, if your spouse and minor children live in Spain, if you're not legally separated, or if your main economic interests are in Spain. This seems very easy, but it's never easy. Of course, every country has its own rules. So it is very easy that Spain can consider you a tax resident because you have spent, for example, more than 183 days in Spain. But another country, like for example Germany, considers you a tax resident in Spain because you maintain all your economic activities there. So it is not easy to establish when you are a tax resident. And especially if you consider you are not a tax resident, you should look into it to be 100% sure that you're not a tax resident of Spain. If both countries consider you a tax resident and there is a double tax treaty between both countries, there are rules which will establish in which country you shall be considered tax resident. You start with the first point, and if that doesn't break the decision, then you go further down. I don't think it's necessary to go now into details, but don't think that maybe because you just spent less than 183 days in Spain, you might not be considered a tax resident in Spain. Also, a very important question is look into it if Spain at least is the country where you spend most of the days. Imagine just 160, but there is no other country in which you have spent 160 days. And especially very important, if you can't provide a tax resident certificate from another country, you might fall into Spanish tax residency quicker than you think. So for people who spend significant time in Spain, I think it is always worthwhile to have a look if there is any risk that they could be considered a tax resident of Spain.
And how would they go about doing that? How would you figure out if you are a tax resident or not? Because it might be something that's...
They have to look into all their personal individual circumstances, and of course they should get the advice from a professional.
Yeah. So it's not published by the government if you are a tax resident or not. It's something that you need to declare.
No. So you can declare if you're a tax resident, but these are not the complicated cases, because if you register yourself as a tax resident, the Spanish tax office is not going to come and say you're not a tax resident. The critical cases are where you think you are not tax resident and don't have registered, and if there is an inspection, they will establish that you're a tax resident.
Yes. What are maybe the most common cases that you've seen that people fall into the trap?
There are cases where your family lives here, children are at school here, but you are still registered in your home country, or even if you haven't spent 183 days, but you don't have a tax resident certificate from another country, and you have spent a significant time in Spain. To be very honest, this is a case-by-case study. There are no general rules, and you have to look at every case individually.
Okay, interesting. Are there any special tax regimes? Mainly, like, is there a possibility where you could be considered by the Spanish tax agency as a resident, but that there's an option to not have to pay all the full tax here and somewhere else, or?
No. The tax regimes you have to apply for. So it means you have already registered as a tax resident. If the Spanish tax office knocks on your door and you were not registered as a tax resident, you cannot then come up and say, okay, I'm a tax resident, but I want to be under a special tax regime. For the special tax regimes only apply if you have applied for it and got it granted. So that means you already registered yourself as a tax resident.
Okay.
There are of course special tax regimes which we can come into a little bit later. In general, if you become a tax resident of Spain, you are a general taxpayer. Spain has worldwide income tax rules, which means that you will have to declare your worldwide income, be it salaries, capital gains, dividends, whatever needs to be declared in Spain. Of course, we have a high net of double tax treaties, which means that some of these incomes will have taxation in another country. Based on the double tax treaties, you will be allowed to deduct the taxes paid abroad. And if we don't have a double tax treaty, you might be allowed to deduct these taxes paid abroad due to our internal income tax law. Mm-hmm. But we have worldwide income taxation.
This counts, by the way, also for pension funds, right? I think
we have worldwide income, so any class of income.
Since a lot of our clients and a lot of the people who come here tend to be people who are looking to retire, that they should be aware of this fact that any income worldwide.
We have worldwide income taxation in Spain. So again, depending on the income, we would have to look how it impacts the taxation. Worldwide income taxation is a principle which a lot of countries have, so that's nothing special. But the tax rates in Spain might be higher or lower than in other countries, so every case needs to be studied. But we have also taxation on assets in Spain. Depending in the region in which you live in Spain, you might be liable to wealth tax. But in any case, independent of the region in which you live, we have a state tax, which is a solidarity tax on big fortunes, which taxes your assets above 3.7 million net. This, of course, is something to look into it because, as we know, a lot of the expats coming to live in our area are normally or very often wealthy people who have either sold their business or whatsoever. So very often have a big fortune, and this tax could be punishing. Mm-hmm. There are exemptions like the family business and so on. Again, we would have to look into it, but it is something to keep in mind that the income tax, every country has a tax on the fortune, on the wealth. Not every country has it. There are actually big European countries who don't have any tax on the wealth, like currently Germany or the UK. So this might make a big difference to the taxation in the home country. So before taking any decision to come and live permanently in Spain or for longer than 6 months, it's definitely worth to get professional advice on these tax matters.
And sorry if I didn't understand it, but these assets, does both inside Spain and outside?
Worldwide assets. We have worldwide income and worldwide assets taxation if you're a tax resident of Spain. So this can be an issue which definitely will always need that somebody looks careful at it. Okay. Then we have some special tax regimes which are very favorable, but these only apply for people who are still working or directors of a company. The most favorable tax regime we have in Spain is called popularly the Beckham regime, just because David Beckham fell under it. And this will allow people who move to Spain to work for a Spanish company, comply with all the requirements to fall under the Beckham and regime, in which case only the salary is taxed at a flat tax rate of, I think, now 24%. No other income outside Spain and not related to the work is taxed. And of course, also very important, no assets outside Spain or capital gains with these assets will fall under Spanish taxation. It's considered for high professionals who either come to work for a Spanish employer or for a foreign company who allows them to work remote control. Mm-hmm. So this is also applicable and goes almost together with the digital nomad visa, because if you're a non-EU citizen and have the possibility to work from home office and your employer allows you to do it from Spain, you might get the digital nomad visa, and afterwards you might be able to apply for the Beckham regime.
So that would be a total of 10 years of.
The-
Because I think the Beckham rule, correct me if I'm wrong, is 5 years.
The Beckham rule is the year you apply for it plus 5 more years.
So 6 in total. Well,
No,
depending.
5 years plus the one you have applied for it. It makes a difference if you apply in January or in December.
Of course, of course. So in the case of the people who do have tax residence here in Spain,
Yes.
and also are paying taxes somewhere else. For instance, I know that in the United States, you're always a tax resident there, essentially.
Yes, the United States is a very special country because it's in principle, as far as I know, the only important country, almost the only country in the world, I think, but at least from the important ones, where you are taxed just by nationality, not by residency. So even if you don't live in the US, if you are a citizen of the US by passport or green card holder, you will always be obliged to file a full income tax return in the US. Nevertheless, we have with the US a double tax treaty, so again, even if paying taxes abroad does not mean that you're going to pay double taxes. The double tax treaty will then come into force and will establish which country has the right to tax which income. And if both countries have the right to tax a certain income, it will establish which country then will give the relief for the tax paid on this income in its own jurisdiction. Of course, we cannot forget that we are not only have this issue not only with individuals, we also have it with companies. Companies can also have dual tax residency. The double tax treaties apply to companies and individuals. Maybe you think, because you have set up a company in Spain, that this is a Spanish tax resident. But if the sole director is a German citizen living and being resident in Germany, the German tax authorities could consider that control and management of this company is done in Germany, and therefore the Spanish company is also a full tax resident of Germany. So the problems regarding tax residency which we can have with individuals can also easily happen with companies.
Wow. So it can get very complex.
So, of course, also companies might have to look into their situation. And of course, if we speak about companies, then not only the double tax treaties, but also the EU directive, mother subsidiaries, and others will apply regarding taxation rights and so on.